one of the things we made peace with in Indus Valley is broadly get the direction right? Mota moti. I love this word, mota moti. Like, 19 beats. The Bernstein report, which said that the top 5% of India account for 40% of discretionary spends. The next 5% account for 28%. India one, firing on all cylinders, will give you half of whatever growth that India get. But it's only half.
Is manufacturing the only playbook which is there? Have you seen any other playbook being played out in the world where, countries have scaled up by doing, let's say, some specialized services and have become developed countries?
And the other thing that interestingly stood out for me was how big construction is. And construction really saved India's ass. VCs today, if you actually look at it, strangely love manufacturing businesses today. The fundamental truth is that India is an over-ventured country.
What is the one silver bullet that is holding us back from taking this 13% to maybe comparable, maybe at least half of China? What would that be?
Hey everyone, welcome to episode 16 of the Asymmetric podcast. We've had an amazing 15 episodes. We love reading your comments, and last time we heard a comment on, can you do a breakdown of the Indus Valley report that was done by Blume Ventures? And, we thought we'd oblige, and why not should we oblige with someone who's been the author of the report alongside his team for the last 4 years. It's really been an inspiration to follow Sajith Pai on Twitter, and here we have him today as our guest in honor, and to cover the Indus Valley report in as much detail as possible. Please welcome Sajith.
Delighted to be here. Thank you. Thank you for having me.
Welcome, Sajith. Thanks for sparing time and also giving all of us this wonderful 4th edition of Blume Presents the Indus Valley report. It's fantastic. Before we even get into it, how has been the weekend? In terms of, it was all there on Twitter. I think for my feed, every third tweet was about Blume. I could see some very interesting memes where people are saying, okay, how long a flight should I book? To people ordering a Blinkit, a printout and saying 10 minutes and I'm ready. Very, very interesting things going on. But I'm sure you have been in the thick of action, people asking you different questions, reactions. Well, let's start with that.
So delighted to be here. I would say that, each year when you publish, you're a little nervous about, because a lot of work's gone in, and I've typically bullied like the analyst who works with me, sometimes an associate. This time there was an analyst, an associate, and we got this editorial fellow. I bully them for 3 months, like drive them nuts. And then you hope that the 180 plus slides this time, I thought we went amok. But there was a clear storyline. So I said, okay, this should work. But you're always very nervous about the reception. And you wonder, is it going to be, the 4th time unlucky or whatever, But it turned out to be a rousing reception. And especially on Twitter. I mean, I think LinkedIn was a little more muted than I expected. But on Twitter was amazing. And I think all of Friday, I got similar feedback saying, hey, I'm hearing more about the Blume report than the ICC Champions Trophy.
No, congratulations on creating a content asset that every founder / VC wants to be a part of. As Peter Thiel said in 0 to 1, right? Don't play other people's games. Create your own game. You have successfully managed to create a new game in venture capital, and it's very hard to replicate. That's the best part about the game, right? You are one of N in that sense. So congratulations on that. Maybe with that note, we should get into some of the most exciting takeaways. I know there's a lot of analysis being done on the 180 plus slides. I'm sure you're already tired of covering more and more slides in detail. But the reason to have you on this podcast, Sajith, is apart from you being such a great person in venture capital and being the custodian of this report with your team, is we take our fans and our listeners very seriously. And we got a comment last week on the podcast saying, please cover the Indus Valley report. So we said, who better than to get Sajith on the pod and maybe get his views and give our listeners sort of a view into, I know 180 slides, but maybe we can capture 8 or 10 of the best insights in the next 1 hour for the team as well.
Yep, absolutely. Happy to do this. Yeah.
So Sajith, I think just to add, I think there was one tweet which said that the best content marketing in the country is done by a VC.
Yeah.
Right? So there is lots to learn here.
Yeah.
For all startups which are funded by Blume and other VCs, that this is how content marketing can really, really do wonders, scale. I have got people messaging me from global VCs saying that, oh, now we understand, some of the situations in India, some of the market in India. So I think a great job done in terms of, telling people about India, what India is about, and why it's so unique. Yeah, I think first one, of course, let's pick up these slides on consumption. And I think the most interesting part, when I was going through is that, typically I would go through a slide and I'll write questions. The most interesting part is the follow-on slide will be answering my question. So which is I think job superbly well done. I think interesting one is as we know, 60% of India's GDP is consumption driven, and it has stayed there for for the time we know. This is the beautiful breakup of how India consumption stacks up. If you break up the GDP, $2.1 trillion is consumption, and then further broken down into retail is $1 trillion and services is $1 trillion. And then, $1 trillion is then broken down into various different retail segments, with grocery and FMCG being the largest, almost 50%. I think the very interesting one is the the chart, right side one, wherein online is 7%. So it means that e-commerce is close to $70 billion and branded has become 37%. Right. So that was quite an interesting takeaway for me. And if I look at, compare this India to other countries, we are today at, as you were saying, 2.1 trillion in terms of retail, which is the fifth largest consumption market globally. Largest one being US. At least when I was thinking about this and marrying the right side chart that we're growing at 7%, if we continue to grow at 7%, we should double, in 10 years. So 2.1 would become 4.2. At least my immediate reaction was, okay, in 10 years, we'll be third largest.
Yeah, should be.
Yeah. What was, what was your other takeaways from this one? What does India need to get right? There are slides which have compared in terms of what China, where was in 2000. Maybe I'll take you to those slides. I think this is the slide which compares India with Indonesia and China. So we were roughly where China was in 2010. I think I have seen different versions of this slide every year. I think sometimes it was 2011, sometimes it was 2009, but roughly at ballpark. And China today is almost $5,000. So I think then the question is, okay, what does it take for India to go there? While we have been seeing that trajectory, that gap of almost 15 years, can that be bridged? Or even if not bridged, will we be there in 15 years where China is today?
Yeah. So I think it's a great question, and I think a question like this can take like an hour. And if you gave it to two economists, they'll write a treatise on this. But I think in short, I'm optimistic about this consumption number growing. Okay, will it be double in 10 years? Possible. But I also feel that the next few years we're going to be hitting a mild air pocket. And we're already beginning to see signs of that. I think what you're seeing here is really the past decade of 7% growth. That might kind of be a little taper down a little bit. Will it go down to like 3-4%? No, I don't think so. But I think it might be a 1-2% lower. So that 10 years might go up a little bit more, going by the rule of 72, right? 72 by 6 might be in 12 years, etc. I think my bigger worry is that a lot of the growth that we are seeing, because finally consumption is going to be driven by the savings that I have, right? I can only consume I have to have my needs. I have to put roti, kapda, makan, education, and then I have products. And all of you are creating what are products which are well beyond the needs. And for that, I think you need discretionary. You need to have discretionary spends. Discretionary spends are out of savings, and I think for savings to happen, incomes need to go up. And my view is, I'm very hopeful though that we will start seeing some shifts. But unless you're able to see income growth, slightly more democratic income growth, and income growth that leads to more savings across the sphere. Per capita consumption or per capita spends will not be as democratized as they will be, and we're going to see a little bit more inequality. So that's my only qualification, and I feel like a few more structural reforms are required. Just before coming in, I was reading an article and it said the last so many years, a very different topic. It said the mobile phone production in the country has not moved beyond 120, 140 million or 140, 160 million. And for the last 4 years, so say 5 years. And so sort of what's happened is India moves in these step functions. We get this big bump. Like Geo gave us one, pulled us 5 years ahead, and then we kind of just stabilize there. And so you need the next positive shock, so to say. And yeah, so I would say like that is my view. To really say that we now need to go beyond the slightly lopsided growth that we are seeing. And am I hopeful about that? I'm broadly hopeful about that.
But just to pick up on the thread, Sajith, we saw cuts of consumption, which is in retail, through online, offline, and branded, unbranded, and discretionary, non-discretionary. Have we looked at cuts on India 1, 2, and 3? Because there are multiple ways to look at this, right? That you mentioned that we may need structural reforms because you want the inequality to maybe reduce for you to. You believe that we will not achieve 7% for the next 10 years broadly unless the inequality reduces. But if most of consumption is happening, let's say in India 1, and let's put a number, like, Kunal has been saying it's 60%. There are various, like you're saying 2/3 of discretionary spends happen here, but discretionary is not full retail, Chirag. For example, the full retail में discretionary और non-discretionary भी अलग है, right? So if India 1 and 2 only move forward with a certain, like, we are very familiar with weighted averages. So on a weighted average, do we believe that we could technically still grow 7% in consumption if India 1 and 2 maybe hit the ball out of the park in terms of consumption? Is that I'm not sure that's the right thing for India, but I'm just, from the numbers' sake, mathematically should be still possible, right?
I would say that I'm very confident about India 1. Okay. I'm not super confident about, I would say, India 2, really. Because if you look at India 1 to India 2, India 1 is, I would say, about 30 million households. Anyway, from I would say $10,000 per capita income upwards, I kind of rounded it off to 15,000 because it's a very wide range, and typically in averages, the peak pulls you. Okay, so
Sorry
median
to
might be
interrupt
more.
on this, Sajith, but when you say 10% of population, which is roughly 150 million people, and we talk
Yeah,
about 30
yeah.
million households, this math actually never hit me that 5 people in every household in India 1 seems a little off, no?
Yeah, but fair enough. I mean, it could be a little smaller than that, about 120 to 140 million. My sense is that many households are not as small as we make it out to be. The average household is 4.8. And you're right.
Wow.
The typical India 1 household could be more like 4.2 to 4.3. But I taken a simplistic one. You could, if you wish, take it around 120, 130 also. I'll be very honest with you. India is a nightmare to get exact data. Okay. So if you want to get exact data, you have to spend a lot of time, and invariably there'll be some issues there. You can't compare two numbers, there's some issue, etc. So one of the things we made peace with in Indus Valley is broadly get the direction right? Mota moti. I love this word, mota moti. Like, 19-20. Like, broadly, what you're saying is you want exactitude, dude, is going to take you 6 hours and 6 interns or 5 analysts. But if you want broadly ballpark figures, I mean, you can get it off the back of an envelope in 30 minutes. What do you want, right? I'll take the ballpark. I'll take mota moti. Give it to me, right? So yeah. So I would say like take it anywhere from 4.2 to 4.5, 4.6, maybe 4.8 is a little bit of a stretch. I grant you that. So I would say 120 to 130 million, etc.
Got
But
it.
yeah, I think, but you're right. But the number of 120, 130 is also interestingly very large, right? It's bigger than Germany, it's bigger than France. It's like, it's a huge number. Like, so
And
that's
here
what,
you are very confident that यहाँ बहुत growth आ सकती है discretionary spending में.
yeah. So there's a Bernstein kind of report which said that the top 5% of India account for 40% of discretionary spends. The next 5% account for 28%. So roughly top 10% accounts for 68% of discretionary spends. And now if you take, now discretionary spends is not like 100%, right? Discretionary spends is actually a smaller portion, like of retail. Services, of course, it's the other way around. So broadly, I would say discretionary spends about half, like, of our consumption. So if you're looking at 70% ka half, like, it's around like 35, 40%. So I would say then their spends also lead to a kind of a, what do you call that? It leads to more money and the flywheel effect. Flywheel effect. So I would say India 1 firing on all cylinders will give you half of whatever growth that India gets. but it's only half, right? And the fact is, you won't get the kind of growth which, like for example, if you've seen the kind of growth we have seen in India, has been that we're not selling enough Hawaii chappal. Yeah, we're not selling enough two-wheelers. Two-wheeler is below last 7-8 years, right? We're selling SUV cars. We're not even
Yeah.
selling. If you see Maruti struggled. They lost like 1,000 bips market share over the last 6-7 years because they had bigger strength in Alto and your
The
Wagonar
entry level
segment.
cars, yeah.
Yeah, and the growth has really been in SUVs. SUVs has hit like 50%. So
Yeah.
so I think that's the thing. If you want a little bit more growth in the basic products, the mass products, which are all the your FMCG counterparts, your FMCG brethren are screaming because of that. They're saying, where's the growth in these 8 rupee, 10 rupee packs? Like, yeah.
But
So
Sajid, isn't that a little opposite of what happened in China? I think you have made an interesting point around this, that Indian consumption seems to be like going more deeper than it being widening.
yeah.
Right? Whereas what we read about in China, I think after this point of hitting the inflection point where we were in, or China was in 2010, it became more widened. They had more people coming in, and it became more broad based. That was a secular push by the government. But your view at the moment is that it looks like that it's going to be, it will of course have a ripple effect or second order effect on this consumption, leading to India to becoming more wider. But you are saying it becomes more wider, it becomes more deeper before it becomes wider.
So this deepening, not widening, has been a post-COVID trend specifically. I think before COVID, it wasn't as K-shaped as it is now. China, in contrast, I've seen the numbers, 2008 to 12, 13 was incredible growth. I think double-digit growth. And
Yeah.
I think they've also, industrialized tremendously, which we haven't done as yet, right? And I think a lot of what we saw in China was really moving people from agriculture, which is sort of very unproductive, into manufacturing, making people travel. And a lot of it is not like, for example, they have the hukou system whereby you're a migrant in Shanghai or Beijing, but you're not a citizen yet, and you have to get a hukou, and which gives it's almost like someone travels to like Bombay, and Bombay you're told you can't vote locally, you can't avail of services because you don't have this hukou, etc. So they can be ruthless about many of these things, right? We can't. So in India, I think manufacturing land is a challenge, and many friends, I think we can get into that if you want. We haven't been able to make those dramatic shifts, which China was able to do in the 2008 to 13, 14 range. So this is so I'll pause
Interesting.
here. Yeah.
Interesting. I think it takes me to two questions. One is, let's say if you are running a business in India, then how should you be thinking? And I think maybe Revant and Shantanu can come in. That you have targeted a segment which possibly lies in India one, and now you want to expand and build out let's say a VC sizable outcome. If let's say that's the case, then how should one think about it? Because this base doesn't seem to be widening at the pace at which you want. You're going to most likely run out of audiences. So then what are the options? How should one people think? We have different playbooks going around where people doing different, etc., etc. And I think second question is more macro, that I've been wondering that what kind of asset creation is India doing really? If you think about it, are we creating assets fund, or at least as first principle, it looks like that we are still solving most of the things by trading people. Even if you look at IT services, it's mostly it's a great business, by the way, no disrespect for the business, but it has a flavor of arbitrage which we leverage, right? And more so today in AI world, where it comes in and we are not putting in emphasis, or is maybe my question is more, is manufacturing the only playbook which is there? Have you seen any other playbook being played out in the world where countries have scaled up by doing, let's say, some specialized services and have become developed countries? Maybe those are the two things which you want to pick up.
Okay. Let's say it's a long question and there's lots to unpack. Maybe I'll start with the last two. So I think there are clear histories of countries. I mean, the four Asian tigers and Japan, and off late, I think Malaysia to an extent, which have been able to move from the underdeveloped world to developing to developed. Okay, and all of them have had us been had manufacturing at the clear one, because it's only manufacturing where you're able to move large swaths of the populace from agriculture, which is typically where they are working, into something, right? Services is not. So I think the challenge services is India made it work, but historically services is not tradable, right? You like a lot of services are like your barber shop or medical. Like historically you I mean for some time now I think the barber shop is not going to be tradable. Medicine is still not tradable because you have teleconsult. But India incredibly discovered this tradable services model through IT and now professional consulting, etc. Right? So we are able to move some people, but numbers are tiny. Like if you look at, for example, our entire workforce, we have 1.4 billion people, 500 to 600 million, 600, close to 600 million people in the labor force, of whom the formal labor force is under 10%, which means the people who go to these offices, like services company, etc., they're less than 50 million people. And that's tiny, right? Like what you want is like 150 million people moving into that. And that is tough, right? And now with AI coming, it's scary. So I think
Yeah,
that's the
it's
fundamental challenge, like just not sizable. And I think we kind of looked at the labor this thing, and I have this charts which actually talk about how many people are in the labor force. And what I've kind of noticed is industry is about close to a third of GDP, but only not even a quarter of the populace works there. And I think you need to kind of change that, like, and I think struggle has been really like, and the other thing that interestingly stood out for me was how big construction is, like, and construction really saved India's ass. So really to say, like, because manufacturing has been not as dramatic as we expected. But construction has been sizable. So I think these are some of the thoughts that are going through my head. So I think, Chirag, I think without manufacturing, without industry, tough. I mean, India is impressive in the sense that we created these gig workers who are like low-end services. And I grant you that it's impressive, right? And we've got, I don't know how many the actual numbers, 4 million, 5 million. I grant you that it's impressive. And startups in a way are really powering so many jobs. But I think without the big manufacturing sector moving, you will struggle. But I'll pause here.
And are you, are you guys seeing any early signals of, India having, manufacturing boom in place, let's say in the next decade or so? While we keep seeing, some of these low assembly works, electronics, which has started to happen in India, but the kind of boom we need, are we seeing, inputs of that or essential ingredients going there?
Yeah, I've been very impressed by some of the steps that the government has taken, and announcements. But when I actually look at the data, and I've actually saw a decline, and there's this chart on page 49, which talks about manufacturing value added as a percentage of GDP. And if it's declined by a percent odd in the last 49, and it's declined by a percent odd in the last few years. And that kind of took me by surprise. And if you look at it, India's reacted well whenever we've taken harsh steps. Like, for example, toys is a great segment where we just, or room air conditioners, very impressive. We just
Yeah.
banned it. And once we banned it, local folks came up. But you can't consistently ban, and otherwise Mr. Trump is going to come calling saying, what are you doing? Like, you got the highest tariffs up and all that. So wherever we have taken these steps, both toys as well as bans, it's worked. Where we've given incentives, it's worked, like smartphone industry, etc. To things, it's worked. It's just that why isn't it working by natural? Like, why isn't it working organically? There are too many strong stories of organic manufacturing, because and I think it's just hard to get get that land, skill labor, combination going. I think that's the fundamental
Yeah, I
challenge.
think
It's
you
not
have made a
easy.
very,
Yeah.
I think you have made
I
this
have a
interesting point around land capital, land
Yeah.
capital
I think
reform.
Revant wants to come in. Yeah.
Yeah, Revant.
uh, I think I'll actually answer your question one later, Chirag. But just on this manufacturing point, I have a follow up. Sajid, why would it be not okay to continue banning this? See, I don't think Trump would have a problem because most of manufacturing anyway is now happening in China. When we banned toys, actually what stopped or what became expensive was the Chinese imports.
Yeah.
So my understanding is that the Indian government broadly has to incentivize Indian manufacturing, but they also need to make sure that the Chinese cheap imports stop, because nobody can compete with China on efficiency, cost. It's just mind-boggling how efficient they are
Yeah.
in terms of cost and speed both, right? Actually,
Yeah.
cost, speed, quality, all three. It's just absolutely amazing, right? So it's not ever going to be a level playing field unless we actually ban and take that step, which I think from a nationalistic perspective is fine. Every
Mm.
country is in some way reversing their globalization stance that they took for the last 15 years, because they are now realizing that, hey, when we were taking this stance, the only nationalistic stance country has actually outpaced everybody in GDP and is now self-sufficient. So they have realized that there's a new sheriff in town, and the only reason that they are who they are is because they took nationalistic approach versus a globalization approach. And now everybody seems to follow. I think India has taken that stance 5 years back. Trump will now take that stance. At least it seems that more and more governments will start taking that stance. At least that seems to be the common sense way of approaching the next 20 years. So I don't necessarily think there is any other way, and it's okay. In the end, if we have to be in some way little shameless about saying that what serves India's interest is the right way in the end, because nobody's coming and solving for India's interest. Whatever USAID money was coming in is also going to now stop anyway, right? So we only have ourselves to, we can only save ourselves, and the way to save it would actually be maybe to be more nationalistic and then incentivize manufacturing, which has worked, as you said, in toys, ACs, mobile manufacturing. Seems no reason why it will not work in quite a few other sectors as well. And the other point I wanted to make, Chirag, was on your first question, that if India one consumption will continue to grow, how do startups think about deepening of markets? I actually have a contrarian view. If you look at the last 15 years, all VC companies and all startups that have gone IPO have built for India one largely, except for maybe someone like Misho. So they have found gold at the bottom of the pyramid, but one of the rare cases in that case, right? Whether you look at even just pure e-commerce in that sense, broadly, while Flipkart may serve 200 million e-commerce users, I can guarantee you that 90% of their profits would be coming from the top 50 million users itself. Swiggy makes most of its money from the top 200 pin codes. So you can't beat the fact that 60% of consumption is with India One, will remain maybe 50 to 60%. I don't see any reason why there wouldn't be value creation. Or, I mean, does it rate limit the number of startups that can succeed every year? Yes. I think that could be. Does it rate limit the fact that VC funds suddenly can't become $2 billion like in the US? Yes. To deliver a MOIC, I'm sure Sajith will have to still keep the fund size a little smaller than what, right? So, but it's okay, right? We've done well in the last 15 years. We just have to be patient and believe in compounding as such. So, is it more nationalistic to have a more nuclear, inclusive India 2 and India 3 growth? Yes, but I don't think the venture capital ecosystem or a founder who wants to worry that, hey, how do I make a large startup if I only focus on India 1? I don't think that should be much of a problem. At least that's my view.
I completely agree. I think if I think Sajith's point, if top 10% of India is accounting for 70% of discretionary spend, I think that becomes obvious. Then that, especially if you are going to that's the market, that's the cream you want to have first, and kind of get to product market fit, scale, etc. And then, because getting to India 3 also comes with tremendous logistical battles. Whatever product or space you're in, India is a complicated country. Like, we have GST registrations in 26 states. Like, it becomes complicated even at our scale to kind of make it work in India. So I think, Chirag, to your first question, I agree with Revant that I think fundamentally, if you're a founder in the space starting out today, then if you're able to get the cream quickly, then your ability to kind of then influence growth downwards and peripherally to Metro India becomes a lot higher. I have a different question, Sajith, for you. When it comes to manufacturing, so you're right. I think on page 49 of the report, it's very clear that electronics, toys, air conditioning, I think whether because of structural things or kind of even enterprise investments, we have seen things take off. But what is like, you've spoken about the underperformance. What is holding us back? I always I think Revant, Chirag and I have discussed this multiple times on this podcast also before, that why are we not able, like 13% compared to peers much lesser? Is it a talent issue? Is it an intent issue? Is it a is it a government blessing issue where sometimes just hard brutal calls are required? like what you were discussing with what China did maybe 15 years back. But what is, if you were to say, what is the one silver bullet that is holding us back from taking this 13% to maybe a comparable, maybe at least half of China? What would that be?
Yeah. So it's a great question, Shantanu. So wondered about this a lot. I don't think there's one magic bullet, but I would say a lot of India's challenges are really down to land and land-related aspects, right? And I'll give you three, four areas in which land becomes complicated. Okay, one, land addresses are not consistent. Okay, the same land will have three different addresses, and sometimes they're registered in two different names, and because they're two different addresses, etc. And that's one. Two, the way land use is regulated. Like for instance, in construction, I think in Maharashtra or someplace, when if you have 1,000 square yard plot, you can't construct on more than 55% of it or 45% of it. I forget what. You can't do 70-80%. You got to keep 45%. Now, I understand there was a reason for this in the past. Maybe you wanted some space for the fire engine to come. Fire engines at the time maybe could not have those things which could reach there and spray. They had to physically go close by, or I don't know what other reasons were. For example, it's legal to keep a spittoon in the workplace. God knows why. Like, there's hundreds of rules. And but fundamentally, what it means is businesses struggle to acquire land, and the government that's particularly good at that is Gujarat, and which is why a lot of manufacturing is flowing there. Or maybe in Tamil Nadu, where, like, for example, a little more better land records and it's not so challenging, etc. So anyone who sorts out land, I would say, as a government, has just focused on let me get large land parcels together. Like, why are you seeing Noida grow? For example, like we ourselves evaluated setting up a university. I used to live in Bombay, and in 2015 shifted to Noida. Like, why did I shift from this thing? Is because we looked at where large land parcels were available, and it finally came down to NCR because and the government there was a little more willing, but really it's about large land parcels because Noida, it was a lot of reclaimed land or whatever, and so I think it's a lot to do with land. I think is one where if you can improve regulate usage of it, if you can kind of incentivize that better, you can have dramatic impacts. There's actually a very interesting part about why India like hoards so much gold. And one of my colleagues, Joseph, has like made it his life's mission to evaluate this. I keep joking that he's Malayali, and as all Malayalis are obsessed with gold, which he says is true, but yeah. So Joseph is that made it his life's mission to work on this. And one thing he found out was because land records are so bad, addressability is so bad, collateral is so hard to enforce on. Like, you can't take land and get a loan against it. As a result, people keep gold, So, and that leads to all sorts of second order effects, etc. So land, I think, is one area where I would say I would try and streamline that. But there are other aspects as well.
But on land, Sajith, is this a design issue or is this a choice issue? Like, do you think that when you see opaque asymmetry, you typically assume whether it's happenstance or someone has designed it that way because clearly it's the most important asset, right? So, what's your view on that? Because if that is the case, then it needs to be solved. If it is something that has happened, then we have to figure out other ways.
So I'll give you an example, a parallel example. It's like, why is Gujarat a dry state, right? Yeah, Gujarat's a dry state because at a certain point they said, no, we don't want anything. Now, Gujarat is Gujarat is like really growing fast, etc. But it's not got as big of a tourism industry. It's not got as big of an IT industry, right? Because people look at it and say, "Yeah, you're dry state, hey, whatever, whatever." Today they can't change it easily. Why? Because there's a mafia there that has come up, which is very happy for the dry state so that they can make money. So what I mean to say, in parallel, like land, over time, see, India is a wonderfully adaptive country, right? So over time, people have come up whose job is to make money, solve problem of land. They'll manage this, they'll manage that, etc. And so they will never, for now, there will be a strong check on making anything streamlined. There will be enough reasons, etc., to say why we should not do this, and lots of arguments will be given, etc. So I would think it initially starts out by choice, but over time it just gets stuck on whatever you want to call it, design or whatever. Yeah.
Wow, interesting. I think what you're saying is that it's been
That's
there for
really
a
interesting.
long enough time for people to now make industries in that status, in that, and assume that it's going to be like that. And whenever there is an attempt to, change that status quo, there is a lot of resistance which comes in, whether it is in form of red tape or form of mafia. It does come in.
But CT, आप सोचो ना यार कि अगर, for example, if the GDP of the country has broadly, and even I think the report also says it, a large part of it has been propped up by government spending, a large part of that on infrastructure. Sajith is saying construction has really kind of saved India's ass. At the same time, land is where opaqueness of value creation is maximum. There is clearly something there that people are kind of holding in a way, whether it is information or the asset itself. That maybe kind of now might be a headwind for our growth, because you can't, like, just a few people cannot hold access to that.
Yeah, absolutely. Yeah. The other one, Revant, building on what you had shared, that why can't the Indian government just ban certain sectors and I put high tariff walls, etc. I think they will try, and you're right. It's not like the US has flourishing industries there that they can come and object. But I think the fundamental issue is, and you yourself alluded to it, it's so cheap. So what happens if you ban? Typically, Indian products are more expensive. So it will be inflationary. The second thing is, for all these products, right, the intermediates also come from China. It's not like the intermediates are made here, and the intermediates only come from China. And so that is, I think, the fundamental issue. I think the government would like to have more industry, but the challenge is that all of Indian, because the volumes are much smaller, China not only makes for its domestic market, which is large, which is 5 times more than India, like the GDP and this thing, but it also makes for the world. So what it means is that per scale manufacturing means it's far cheaper to make there.
Yeah.
So India, I think the challenge for us will be, yes, we can encourage Atmanirbhar, we can do all that we want, but in a country of ours with $2,700 per capita income, it will be inflationary. We will be comfortable. We are okay. We are anyway the people who have most of our products coming from the West. We are typically buying Uniqlo, which is made in Vietnam. We are buying Apple, which is today made in India, but till now it is made somewhere else, like or China. So we will be comfortable, but the poor people will struggle a little bit. So I think these are the Hobbesian choices facing the Indian government. Yeah.
But I have a question again there, Sajith. If 60% of consumption is India one, and if you see what has been banned was mobile phones, ACs, toys, effectively, I think the government is specifically going after the India one consumption. And I know pinch will be felt by India one also, because India one was on Twitter for the last 1 year saying, boss, the taxation is too much. The government did help, right? Ki chalo theek hai yaar, we will figure out a way for put more money in your pocket. Because I had the same question on what Trump is doing right now, and wouldn't it be inflationary? But I think it's a question of it's exactly what I keep telling my team as well, right? Hard today, easy tomorrow. You need to sometimes take a few hard calls so that the compounding effect will actually give you a lot of easy life in the future. So short-term pain to hoga thoda sa isme.
I fully agree with what you're saying. We have to take these short-term calls, and I think a good way to approach is to specifically choose India one heavy consumption items, like and AC is a good thing. Okay, so for example, air purifiers. Why doesn't the government incentivize air? Not that the poor people don't need it, but every rich person will say that I don't mind having 5 in the house.
Correct.
Bathroom mein bhi laga deta hu. Like because you want it to complete. So government, and finally, it's a very simple device, like it's not a very complicated rocket science, like So I think some of these things can be encouraged by the government for sure. I agree with you.
On a side note, air purifier and bathroom is a separate use case. One must discuss on a separate asymmetric episode. Oh, very true. Very, very true. Very true.
I think people will also get a cue on this, Sajith, that I think you're going to get 3 applications in the next 1 month from founders saying, I'm building the air purifier from India. So please watch out for some of those.
No, absolutely. Happy to. If it excites one founder to build for India, happy to. Outcome achieved.
Sajith, if you're in Noida, I don't know if you've been to the Zetwork facility. We visited like a few days back. Boss, like on that note, I think some of the 2 lakh square foot of just state of the art stuff. Like my team came back and said, like, this is something like we've not even seen in China. So somewhere I think people are kind of really kind of pulling their act together. I think, and that's the thing, right? I think how much time can we kind of really depend on government spending to prop up the GDP? I think private enterprise has to step up from an innovation standpoint and scale, and it's good to see this happen even at younger, more new age companies, as opposed to kind of just depending upon automotive sector or phones and electronics, which have typically been more established companies and by design obviously take much longer to from a decision making standpoint. It's good to see younger companies do it as well. I think in our office building, Aman and the board team is on the ground floor. I think Pranjal, who heads their supply chain, has spoken very publicly about how kind of bringing it all to India and setting it up. I saw Aman the other day with President Macron and Mr. Modi kind of talking about manufacturing in India as well. So I think top of mind to hey across the board.
No, I'd love to see Zetwork and all of these really take, kind of hit acceleration. Love to. I'll pause here. Yeah.
But generally, out of curiosity, Revant and Shantanu, is it easy setting up manufacturing in India, or is it like really, really tough? I have no clue.
Yeah, but एक चीज, whenever I was at McKinsey, and we used to serve like large clients, right? Like large revenues in the few thousands of crores, cash in the bank. The moment there was an opportunity to deploy cash in manufacturing, की factory लगानी है, दनादन लगा देते थे. People would just immediately, whether it's Vedanta Group, Adani, Ambani, UPL, whatever, the first thing they would do is पैसा है, लगाना है, factory लगा दो. That was the mindset. Because the capex ROCE was so clear in those spaces, and if you look at China also, the thing that they have done across product lines is that they just put crazy supply. And they pick up, like for example, plastic polymers. They picked up category by category and just put in crazy supplies and then kind of push the cost curve to the left fully and kind of outcompeted the world, right? So if you know how to do it, and the playbook is kind of standardized, it's a no-brainer to do it. The issue is a lot of us are kind of doing it for the first time. You start off, I can't go to Sajith and say, "Give me a razor ki factory lagani 50 crore do." Sajith will like, get out of here. There's no way we're funding that, right? So you have to, like, for younger companies to set up manufacturing is a difficult thing, but most traditional businesses have always kind of been
So
factories.
Shantanu, are you saying कि cost of capital is also a factor here? कि एक different class of capital चाहिए for to be funded, because VCs will have
The capital भी नहीं है.
Yeah, generally we are like
नहीं,
entrepreneurs are like more inspired by doing more tech things, and these physical offline things come out to be as कि यार इसमें low ROCE बनता है, low ROIC बनता है, and some of these things become a dead trend, whereas India needs asset creation to happen.
No, let's break it down into two things, right? First, venture is usually for non-linear models, and manufacturing is a linear model in some case. So ROCE और MOIC तक तो पहुंचते ही नहीं है पहले. Let's leave that on the side. But to that case, like, I can give you a nuanced context because we have backward integrated. The difference is we don't operate that factory. We were not experts. We didn't know how to do it. But we partnered with someone who knew how to do it, and we effectively funded that. So I went to the board, which is VCs, and said that I need to deploy X amount of money. And the obvious question was that what's the net benefit? And the benefit had to clearly accrue in terms of you had to show that in the P&L. That was it lower CAC? Was it higher conversion? Was it exclusivity of supply? What is it that you will get that effectively you will get a alpha on your business where you are trying to scale non-linearly? Because a factory can't scale non-linearly. But can a factory help you scale non-linearly is where I think the math fits in, which very few people have done so. Let me give you an example of how e-commerce companies do logistics. Like for Meesho to have said that I will first build out a business model where I'll connect buyer and seller and build a network. Now they are saying that I will put in the logistics capex to build out the logistics also because it is going to help me compound this non-linearity of scale on the platform. And that investment then becomes more like a capex heavy investment, but it's still to power the non-linear outcome versus actually create the non-linear outcome in a standalone setup. I hope that sort of made sense.
No, but Revant, I would disagree. I don't think factories are linear output. Factories have historically been linear outcomes in India because I don't think manufacturing promoters or manufacturing first CEOs actually thought non-linear in the way they could kind of sweat the factory. So let me give you an example, right? If you look at Samir at Hindustan Foods, he put in the factory and then started linear stacking brands on top of it. And suddenly it's a 2,500 crore business that is built off of like a 3-4 factory base, but multiple brands on top of it. So our ट्रेडिशनल अप्रोच की फैक्ट्री लगा के उसको फिर कन्वर्जन कॉस्ट पे बेचेंगे, दैट विल नेवर हैव नॉन लीनियर आउटकम्स व्हिच लेट्स से अ वीसी और that kind of capital will look for. But if you are able to say I will own the manufacturing and then kind of build brand on top of it, which is for example what you're doing or what Lenskart would do, or a lot of companies are now thinking about, that's where you're able to combine both. And I don't think it's an either or. I don't think there's a choice there. I think you can actually do both if you're smart about it.
I think fair point, Shantanu. The only limited point I was making was आपको पहले डिमांड प्रूव करना पड़ेगा, फिर आप फैक्ट्री डालने के लिए कैपिटल डाल पाओगे.
And maybe Revant, double click on that कि let's say if you were to go day one and say कि मैं फैक्ट्री लगाऊंगा क्योंकि मेरे को पता है कि इक्वेशन ऐसे फिट हो जाएगी and I will get demand. Will it be very hard for you to raise because of the scarcity of capital and maybe it originates there?
I would actually still sell and assume that let's say my gross margin today is 50% because I don't own the factory. I will sell at a loss and say that जब मैं फैक्ट्री डालूंगा तो ये 50% ग्रॉस मार्जिन 70 हो जाएगा. So but I still need to prove the demand कि इस प्राइस पॉइंट पे और इस मार्केटिंग डॉलर पे देखो डिमांड आ रहा है. आई एम लूजिंग मनी राइट नाउ ऑन CM2, बट दिस विल बिकम पॉजिटिव इफ आई पुट द फैक्ट्री. उसमें पैसे मिल जाएंगे मेरे को. बट आई डोंट थिंक एनीबडी विल बैक द फैक्ट दैट आपके पास डिमांड नहीं है. सी इवन फॉर Agilitas, if you look at what he did, he bought existing factories which had clients. By the way, even for Hindustan Foods, Shantanu, you have worked with Hindustan Foods where you were his client. They already had a demand book where your asset turnover was clear, where you were actually making money, and then उसके ऊपर आप बखन और बनाओ वो अलग है, right? So I'm just saying that that's still a linear model that has potential for non-linearity because a lot of manufacturers are now building brands, right? And coming, they're sort of forward integrating. Their second generation, third generation are putting that. But I think if you look at how to get venture scale, I would still get an existing. Like I'll tell you another interesting model that I just backed a founder. This is the second time founder. He's going and taking licenses of existing brands in a category that they don't operate in. And he's saying, I will get it manufactured and create this brand for you. But demand set है ना. Like super dry के कपड़े बिकते हैं, तो super dry का luggage क्यों नहीं बिकेगा? So his point is कि मैं brand risk, demand risk नहीं ले रहा हूँ करके मैं. Venture will back that because it's like बस demand risk नहीं है करके. अब non-linearity और क्या scale बनेगा, that risk they will take. But डिमांड आएगा कि नहीं वो रिस्क कोई नहीं ले सकता यार. आई डोंट नो, मे बी वी आर 3 operators debating this. Sajith, you are the VC, you should tell us what would you back.
No, I think with VCs, see, there is capital for every kind of risk, and I think what investors don't like is uncertainty. Risk they can live with, and risk they can price. Whatever can be priced, they will be. And I think the seed too. I would say I think sometimes even the Series A stage, but typically at seed, pre-Series A. I think to a certain extent, we're willing to take some of the demand risk to a certain extent. But yeah, but this example that you gave, where super dry के कपड़े हैं, तो super dry के luggage क्यों नहीं बिक सकता? It kind of reduces that risk. So I would say that improves the VC transaction gain for the founder, right? It kind of improves the thing that, oh, VC say, wow, this is like de-risking of the model, so to say, right? So,
Yeah.
but I would say C2, I think pre-series stage, I think some of the VCs can take this risk. And the other one is, I think I love the example that Shantanu gave of Zetwork. And Zetworks has been one of my favorite models, right? It's very unique to India. I don't think Zetwork type of model, like people ask me, yeah, give me 1 or 2 models that are only in India, right? And then I have this choice set of 3, 4, etc. And Zetwork is one of them. Because Zetwork took advantage of India's fundamental issue, that undersized manufacturing. And they said, Acha, this guy's got only some 400 workers, this guy's got only some 600 workers. But if I combine them, then I can kind of, pull together like 2,000 workers. So, but fundamentally created, the initial product was cloud factories. Like I would take your order, I would split it across these 3, 4. And then it thought of very interesting things like, oh, the real reason why delays happen is these guys wait for the lowest prices. They don't care if it's late or something. They wait for the lowest prices and then they put out this thing. So if I give them the material and treat it as a labor only this thing, then I can get it faster. And now I love the fact that they have the confidence to set up these huge plants, etc. I think I love the debate on between here. And I think VCs today, if you actually look at it, strangely love manufacturing businesses today. Okay, I don't know what has changed, but there was a time when I came in 2018, it was a little questionable, and I think one of the most interesting things that happened is from 2018 to 24, a lot of businesses that were very hot have become not so hot. Education. A lot of businesses that were a little questionable have become, manufacturing is one of them. For example, bold care type taboo products have become a lot more acceptable. even therapy, it was not as acceptable, etc. So I really love the way these one has gone down, one has gone up.
Very interesting. Oh, this keeps swinging between thin stack versus thick stack. You know, that India may, because revenue pools are limited. How do you build out a decently sized outcome if you are building a thin stack business? And then, while that manifestation is also right, that you start with proving demand, get to scale, and then you can always integrate backward and get to thick stack. But it's easier said than done. Companies have proven it. Another Sajith unique company which you were mentioning is Lenskart. I'm sure it's on your list. They have also done a very unique one, fully integrated full stack.
Yeah, Lenskart is of course not unique in the sense like it's a definitely a special Indian company, but the business model there say is not unique. But I love the way they've been able to kind of work backward. The other one I would say, Chirag, is that a lot of the companies you start out with India one, and then at some point you'll have to say that can I, for example, there is a certain kind of TAM or really like a SOM, a serviceable obtainable market. And then what you will look at is and say that can I kind of expand that TAM by adding more SKUs? Second is going a little more full stack. Then there are ways in which you can kind of go into what we call India Zero, which is abroad, right? Which is sort of one trend we are seeing. The second is to really rethink some aspect of your product and make it more amenable for India too. Like even Revant's products, right? India too also has some of these needs. They also want to look good. They also don't want to kind of lose hair, right? They have their things, but it's just at the price point at which he operates right now. So he'll have to rethink fundamentally what it means, right? Right, So one favorite example of late is this Whole Truth, which is this energy bar for people like us, right? And there's this biscuit that I recently came across called Takat, which is really, which is energy biscuit. It's not even energy bar, energy biscuit. Because if you look at why Glucon-D sells, why Glucon-D is such a huge brand is it fulfills that need for cheap carbs. With chai ke saath do teen Glucon-D. Whether it's a driver to this famous picture of the Indigo owner who was snapped having Glucon-D with, a chai. So everybody loves this carb kick. And I think, so I'm saying like, really, that would be the other way around, where you take your product as it is, engineer it for what is more acceptable at a mass level, really. And that is sort of the other way to kind of grow that.
Interesting. We can go on and on. We have been only discussing India one. I can spark another debate by saying Red Bull versus Sting. But I think in interest of time, let's move on to one another interesting section on the report, which is also, one of our favorite topics, quick commerce. I think I'll quickly take you, or Sajid, do you want to take us through the report? And
By the way, Sajid, big kudos for putting tweets throughout the report. It made it such a good read, explaining India 1, 2, 3 to Modi ji. That is fantastic. But yeah.
Yeah. I think with regard to quick commerce, I think broadly you can read that as a set of slides which cover a few themes. One is that it looks at the growth. Wow, growth is so crazy. Okay, then it looks at why has quick commerce worked in India and not in too many other markets?
Yeah.
And there, I think the fundamental story is that India is a great example of leapfrogging, right? Like we have, like whether you take landline phones, whether you take Wi-Fi, whether we've kind of skipped them to go into mobile internet. And same way, we have skipped modern retail. DMart is about the only one, and of course it will grow, and DMart will grow specifically. But the whole modern retail category is a tough one for India, because India is a country where, barring a few of us, right, but even folks like us, our type of shopping is very different from how people like us, when we go to the West, shop. People like us will go to the West once in 2 weeks. We'll go to the Costco or Kroger's or Walmart or something like that. We'll stock up. We have huge ass refrigerators. We'll put everything, and very rarely will we do what are called top up runs. So the top ups are expensive. You can, and this is one of the things someone told me, that I can't do impulsive shopping in the US in grocery. If you do impulsive shopping from the corner store, you will spend 4x the amount, because yours is like that, right? There's no MRP. Anyone can charge what they want basis this thing. So So modern retail doesn't exist in India, and that is what has given basically the foothold for quick commerce to kind of come in. And then, of course, the whole density and all that angle. So this is the second section. Then why does quick commerce work in India? Third is, and yeah, so there are these slides, etc. Third is, how is quick commerce growing? And one of the most interesting thing is quick commerce started out, and Zepto, full credit to them, they started with 1,000 SKUs, and Blinkit came and said, hold my beer, like, whatever. They hit 10,000 SKUs, right? And they're selling electronics, they're selling this thing, etc. They've also expanded fast into more locations. Then Zepto, to its credit, has grown in a little more capital constrained manner, and they got into private labels, meat, etc. So Blinkit has not been so much into private labels; they've been more SKU led. Then advertising. So these are all ways in which they've expanded TAM or margins. And so we looked at some of these growth levers, so to say. That's really the third section. Then we looked at implications, like who is quick commerce good for? Quick commerce is great for brands such as yours, right? Like Shantanu and those things, because fundamentally it's a new channel, right? It's a channel that allows you to get democratized very fast, and something makes a level playing field. And this is sort of like we have invested in a small amount in a sanitary napkin brand. The kind of numbers they're getting on Blinkit is crazy, right? So quick commerce is very friendly to disruptor brands, which D2C founders are building. So D2C founders love quick commerce, but at some point, Amazon, we've been there, done that with Amazon. Some point, some of these guys will say, hey, this category looks really good. These guys are all manufacturing in China. I can also manufacture in China and bring it here. Then we'll have to see what happens, right? So as of now, quick commerce is a friend to D2C, sort of a frenemy to FMCG. And for Kirana, they're just eviscerating Kirana. So if like, and that's sort of, I think, the fourth one. And finally, we actually said, look, let's take a first principle look at this. And one of the things I've seen it in India, like, is India is a country of like S curves. And the way S curves come in India is they have this, the vertical part of the S curve is very steep, right? once a category, like if you take food delivery, take e-commerce, suddenly you have this year of crazy growth, like 2015 or so in e-commerce, 2017, 18 in food delivery, and quick commerce is now 1-2 years. So then what happens? It kind of tapers fast because there is a natural ceiling. End of the day, it's a $2,750 per capita income. There are only 30-40 million households. Finally, like, how much at some point, if the discounts stop, and already, if you look at some of the data that some of the analyst reports are sharing, and it really has two kinds of analyst reports, right? One is an analyst report hopes to kind of be a left lead banker or one of the bankers for Zepto, right? And there I've seen like this report which actually looks at Blinkit in FY49. I kid you not, even to FY49 to get the data to do a DCF. Okay, so that's the sort of this thing, the project of FY49. Sometimes then there are the people who know that कि हमको मिलने वाला नहीं है, let's write a very provocative report and build a brand. So we've collected all kinds of reports. Mr. looked at some 300 reports. And finally, my colleagues had to beg me कि Sajith और नहीं दोगे, like, ये बंद हो गया. Like, so I think some of the two reports which we looked at were very interesting, and one was a Bernstein report, one was an HDFC Sec report, which kind of said, boss, itna pin code hai, which are so attractive. Itna nahi hai, jitna aap soch rahe ho. Now, quick commerce would prove it wrong. See, no founder is sitting and waiting for equity analysts to tell me how to run my business.
Yeah.
The great founders, right? They don't read all of this. Dipinder ko kisi ne nahi bataya. Dipinder ko everybody said, yeah, down it, and he said, fuck you. Like, I'll show you how it's done.
Chirag,
But
maybe you
he
can show
didn't
that
care.
chart of the estimated versus actual Zomato
Yeah.
number. I think that's very, very, very eye-opening, right?
Yeah.
But slight disagreement there, Sajith. I'm sure when Zomato was going for IPO, even they believed that these numbers they would hit, because everyone says management estimates in the end, right? Now, the fact that I completely agree with you, the steepness of the S curves also stops very quickly, especially because Zepto will go public this year, and the pressure on all three stocks is going to be livid considering how much money they have raised, right? So they will have to rationalize, if I can call it, their spending on customer acquisition, on discounting and stuff like that very soon, and that will bring some sort of sanity to the market. But completely agree on this that we seem to have a period of very rapid growth, and then we have the stabilization framework where the real GMV starts appearing. Like nobody expected food delivery to slow down so much, but what we are seeing is as soon as you wean people off discounts, wean people off the free deliveries, the real
Yes.
GMV of India starts showing up.
Absolutely.
Okay,
So
but now
Or
that
discounts,
before, right?
discount tend to move channels. Suddenly, we are seeing people moving to ONDC.
yeah, I want to build build on one point Revant said, that the real GMV. I think it's a very perceptive point. VS said something similar to me. Like he said, he said we never look at MTU, million, like whatever, like monthly transacting
Monthly
users. We look at twice monthly transacting users. He said, jab monthly like for example here, actual Zomato monthly transacting users, we look at people who do at least 2 transactions. The number dramatically reduces in India. And I've looked at stock market data on this. The moment you put some size criterion, कि कितने लोगों ने 1 लाख से ऊपर trading किया, whatever number that is being claimed, इतना demat account, इतना number, it just drops dramatically. So India is a country with like the depth only at the top, right? 10%. So this is the other point I want to say, that and broadly agree with Revant that the real GMV, that is of discount of these steroid shots, right? आपने GMV steroid shot के बलबूते पे बना दिया है, like whether it's discount, freebies, all that. अब निकालोगे तो really you get to see what is the truth, right? Yeah, I agree with him. Yeah, sorry.
No, we've seen this with Uber, Ola also, no? With
Yeah,
Uber, Ola
absolutely.
also, like we always thought that that's the large mobility market, but the moment the discounts went away,
Yeah.
then it suddenly became a lot smaller market. So, and then that's where the whole amount of capital to go in did not kind of live up to
Absolutely.
the
Great
the
example. Yeah,
And
great
Shantanu,
example.
on top of it, we realized that there is a new India-specific model which emerged, the Namayatri, which said that you can't charge it as a percentage of let's say the GMV flowing through you for cars rides. It has to be monthly subscription. It has changed the entire revenue business model of that sector only. Right now, in fact, Uber has also admitted or have changed their India pricing to saying that autos, they will charge subscription fees.
Yeah. No, I think I see this as 3 levels, right? First is that, yeah, I'll do what is working there. I'll do it here, right? Which is like your Ola, etc., right? Then you look at the other more intelligent variants of that, like Rapido, which says, yeah, let me look at the fundamental product. Like, two-wheeler, people need to go to two-wheeler. So that comes with much better unit economics, etc. Then there are people who really question this whole thing that, let me go even more deeper. That what really do we need to achieve? And then they change the model itself to like Namayatri. So Ola Auto, Rapido, Namayatri, I see as like they're like version control, version 1, version 2, version 3, whatever you want to call it.
I love the way you have put it. We have been here before.
Yeah.
I think that's, we have certainly been here before. If you speak to any VC, he would say that, whether they are a rider on quick commerce or not, they will say that we've been here before. We have seen this happen before, all money going in and suddenly, growth tapering off and there is no excitement around the sector.
Yeah. But sometimes all of this realism can be dangerous in my profession. My profession is about, at least at this stage, a little bit of unbridled optimism. So I do fight it, and sometimes you can be too intellectual about it, right? Both the angrezi, like you can bring in too much angrezi. And right now, anything quick commerce, anything that smells of quick commerce will get funded, right? So like whatever quick commerce services, aap bolo, that'll get funded. So it's a particularly interesting time to be a VC who is not as bullish on quick commerce. But to be truthful, I like some models. Like, for example, we met this company. I mean, of course, he got funded super fast. When I met him and he said, sir, I know if the appointment rakha tha, but beach mein fund ho gaya mera, theek hai? So I said, okay, no problem, sir. I got it. Like, So he said, like, he met a VC, met in the morning. And then they told him, Arey, you fly with us today. So he did not change. He flew with them from Bangalore to Delhi, met the partner. And then either that night or the next morning, they gave him a TS. So he was in quick commerce for some particular this thing. So and I heard the story, I was blown. Like wow. Like,
so VCs are also quick.
Also.
Not only you
it's
get
the quickest term sheet. Yeah, it's quick sheet. Yeah, quick. Good work. Yeah.
One company which should get valued more is GoKwik, yaar then.
Absolutely.
Yeah, man.
एक शांति, ये खुशी नहीं होगा कभी. Chirag is never happy with his valuation. So
यार कुछ तो at least right to play, right to win, जो भी बोलो, पर नाम ही है ना तो.
Bilkul, sir. Yeah.
A little hard question for you, Sajith, and sorry for putting you on the spot on this, but
No, not at all.
considering venture returns from India have taken a lot of time, like the average return for the first few vintages has been roughly 14 odd years. And while it's getting faster now for funds, the most lucrative option that we will all now talk about is the deepening of the Indian capital markets. But the Indian capital markets are now turning back and saying that, boss, you guys really scale a lot, but when it times to deliver profit, the real GMV or the real market size is shown, which is not as exciting as what you projected when you wanted to go IPO, right? Do we see a tapering of expectations, or maybe some of these realistic questions coming in that, yeah, great, at seed and series A, we can be excited about the potential, but if the eventual exit that we will get is going to be on a successful IPO, and every VC is very proud to talk about seed to scale to IPO. Because at least from what I read on the street, and I am old enough to have friends in mutual fund industry, because that was, when we passed out in 2007, 8, 9, this was a big industry, right? And most of them stuck around. Half of them are fund managers who just give me a very big dose of reality when I talk about my business, and they're like, boss, tu free cash flow bata karke, right? And like today, I was having this meeting with my team, and they were super excited, even saying 70% growth. I'm like, acha, EBITDA kitna banega? And they're like, even dono mein se ek cheez choose karo aap. So we still seem to be making that choice between growth and EBITDA, and eventually free cash flow, where the real growth rates, even for maybe traditional businesses like brands, seem to taper off, and we are seeing that with Honasa as well, right? As there is question mark on EBITDA, growth rates are coming down. So in a limited time like India, and if we are saying that we are still constrained to India 1, which is just deepening and we are not able to grow broad, some of these things just sort of beg to question as to how do we really see venture outcomes in India, and what's been your thought process, and how's it been evolving over the last 1 or 2 years, seeing the data that we are seeing from the public markets as well?
It's a perceptive question, and it's like a chakravyuh. Each answer or continuing answer pulls me more and more into a dangerous trap, right? Because the fundamental truth is that India is an overventured country.
Yeah.
I done this analysis in 2018 where I looked at India 1, which is really the consumption size, and thoda India took a 10% up, I added it and I said, looked at equivalent countries like Mexico, Turkey, which are in size, right? And I saw that we are like 22x the size. We're 18x the size. So then I sat and analyzed why it is. And there are many interesting reasons. India is like a lot of people in Silicon Valley. Then India is a big market, the next China, all of that, combination of these factors. So the thing is, and the Western funds who deploy money, they are some of them are seeing good returns. It depends on which fund. Like if you put money in that Axtel Car Flipkart fund, you did well. Now the other part, Revant, you as operators, founders, you would think about that is the exchange rate. So I met someone who had put in 2014 or 15 into a fund 61 rupees. Today it's at 87. He's saying, "Bye, how you will have to generate far more returns, and that's a pressure on us, right?" So the exchange rate is fun killer as well. So because a lot of us have foreign capital, there's a pressure to generate, to do even better to return money back. Now, negative is the fact that we do have an undersized TAM. And even though people have got a little real estate, they know it's not like the 400 million middle class, but still they get carried away, right? The moment they see growth. And the other thing is, I would love to do a study at some point if I get a summer intern of these sharp growth patterns, right? They tend to be very sharp and short, right? So it'll be like this, but at brief period it'll be like vertical, and everybody will say, "Wow, it's going to the moon," right? And then it quickly hits that growth taper. So I would say when we looked at that last year, I think year before last, I looked at the large Indian companies, which are these top 100 most valuable listed companies. I divided them into 3 categories. One where regulatory rajas, which is your Reliance, anyone who gets a license and then leverages that, Adani, L&T, etc. Not that they're doing anything, it's just that the way in which you grow is very different. You get the license and you build out because the government benefits come in only a little later. Even a Dyson I would put in that category. Then there are these what I call big build in India for global, big wigs I call them, which is Infosys, etc. Anyone whose labor force is in rupees, you pay in rupees and sell in dollars. The middle category, I call them consumer compounders. Your HDFC Bank, Unilever, etc. It's basically a tax on the Indian consumer wallet. One big learning is they never created the market. They never invested ahead of the market. They said, maybe because they were not venture investors, they said, we'll grow with the market. And they never had to overinvest in creating the market. Now, where capital has gone in from venture is in creating the market. Uber, Ola ka market create kar diya. The moment you took off the steroid shots, like, e-commerce ka bhi create kar diya, itna money has gone in that I don't think anyone has made any profit. Niches mein to profit ban gaya hoga. I'm not denying it. And quick commerce, we'll see intrinsically it's a better model. Each generation is much better. It's levered better. Intrinsically, it's a better model, but it's like 3% contribution margin, 4%. Even at best scale, people can't see it about 3-4%. The ROCE is okay. It's interesting. We'll have to see what it finally settles down at. So I think my big learning finally from all of this is that the India venture is a tricky market. You have to be very careful in being capital efficient because the outcomes are not as large. You may get lucky. Occasionally, you are a Razor Pay. Occasionally, you are a Phone Pay. So you may get lucky, okay? And I'm saying, great. Here, it really doesn't matter. So I call these hyperscalers. But typically, 90% of Indian unicorns, or even this thing, will be capital C scalers, or what I call capital efficient scalers. You get a little more careful in how much you invest, etc. Now, this is as far as the demand is concerned. The supply side now why do venture investors still put money? The thing is, I realized that venture investors also have some unique challenges. One, they also have to deploy money. They have deployment pressure. It's the highest of the first world problems. The lowest of the first world problem ki मेरी buy nahi aayi, made nahi aayi. Oh my God, like it's a problem, man. Like, highest of the first world problem is somebody wakes up in SoftBank or some of these bad Middle East, says, right, cracks his knuckles and says, I have to deploy 300 million, I have to deploy 50 million here, 100 million here. Oh my God, there's so much stress. So where does that money go? That money then has to find socially acceptable uses of deployment, socially acceptable deployment of capital, which means I have to put money into things where my friends won't call me a fool. That is where I'll put in AI, I'll put in quick commerce, etc. So there's huge appetite for these because these are the socially most acceptable places to deploy my capital. Then, of course, there's a China plus one. Where else will you go? Indonesia is fucking declined. Indonesia one has declined. Like that's a scary thing. So funds have got halved. The equivalent, like Blume equivalent funds there in Tudo and all have had to reduce their size because and so India is one of the last few standing, right? Like so money has to find its way into India. So I think the Indian venture market has gotten this very interesting thing, like slightly on the smaller side, still growing for true venture scale outcomes, but just too exciting and no alternatives, but to keep getting capital. Right. And I think there is always these pulls and pressures which come along. I hope I'll find a job in this industry after this. And yeah, but that's the truth.
No, very, very nice to hear candid views on this. We've discussed this on the podcast before where you are actually echoing exactly our views. And this is us being optimistic founders, not only optimistic for the last 5 or 7 years, but we are also optimistic for the next 10. But we do agree that we are overfunded in terms of the venture space. We've discussed the Sequoia framework, which was more about PMF, but we applied it to markets where hard fact markets are where new habits get created. Hair on fire markets are where existing habits are there. I love your analogy of consumer compounders which operate in hair on fire markets. आग लगी हुई है वहाँ अपना market share बना लो, नई आदत के पीछे मत जाओ. All of venture dollar and venture outcomes have got created in hard fact, where a new habit has got created, which requires compounding of time as well as money. But yeah, how those like Uber or a Airbnb have become outliers in terms of even profitability and free cash flow while being hard fact markets has not happened yet in India. Is still a function of the TAM, and therefore we may need to wait 10 more years for maybe a Zomato or maybe 20 more, as you said, 2047 ka DCF karke shayad the share price may make sense, is at least the reality that India lives in today. So amazing candidness, and really appreciate that view, Sajith.
No, super, Sajith. I have always, been a fan, followed you on Twitter. Good to be doing this with you. मुझे बहुत मजा आ गया. I think it's become a masterclass on many, many ends.
No, same here. Enjoyed this chat hugely. And yeah, it's been a pleasure meeting you all. And I think I've spoken once with Revant, never spoken to Shantanu. And Chirag, of course, we have spoken. So it's been great. And it was an interesting chat. And likewise, I learned a lot too. And hopefully made 3 friends, so it's great.
No, I think the thing with podcasts like this is, and Revant and Chirag have come on the one that I run called the Barbershop also, is that you actually get 1.5 to 2.5 hours with someone talking one-on-one with zero interruption from anyone else. And any networking event or a dinner or even like a casual catch up at home will always have like 5 other people, like family members or other friends or whatever. But this is like high intensity, like kind of super personal 1-2 hours. So I always find myself kind of feeling like, oh, I feel like I've known this person for a long time. And going through your report. Thanks for putting me right next to Sridhar, Vembu and Dipinder, by the way. That is extreme company, by the way. I love that it's there. But amazing to see what you've built and all the thoughts, because I think for us, frankly, we are so, sometimes founders, people watching this are also so close to their business, so unidimensional in their overall worldviews, that this kind of intelligent, data-driven, exhaustive commentary on business in India, I think is super helpful. So thank you. I think this is a lot of work, by the way. I don't know how do you guys do this? Like, do you have like analysts and associates kind of like doing this for months, or do you work with a consulting firm to do this? How do you guys do this? This is a lot of work.
Yeah. Yeah, so we don't have work with a consulting firm. It's basically, this time there were 4 of us. There was like a full-time intern, so to say, an editorial fellow. So fundamentally, we start kind of slow burn process somewhere in, I would say, September, October, where we basically start collecting stuff. We go through ideas. We try and meet once a week. And the intern, starts chopping editorial fellow Dhruv. We start snipping some of these reports, etc. But then the intense part is from Jan, like I would say, late December for me. And I think my only crib with the last 4 years of the report is I probably need to change the timing, or like the Delhi winters. I haven't enjoyed the last 4 Delhi winters, because by the time December comes or the good Delhi winter comes, I'm like, yeah, Indus Valley report shuru karna padega abhi. So so the most pleasant time, of course, of Delhi, the winters, and when people call you and saying, Sajith, kahan hai? Mile? Yeah, thoda reports pe thoda kaam kar raha hu, like in the city. Yeah. So that has been one crib. And but otherwise the heavy burn period or the heavy intense period is typically from late December for me, mid Jan for the team. So there's one analyst and one associate. And I think from mid Jan we're almost full time. About a month we are full time into this. So it does take time. And sometimes you can't move fast on some of these investments. So I'm always questioning but that's how life is, So
No,
yeah.
it's a rich piece of literature, by the way.
Yeah.
I would assume this would have been a lot more people, by the way.
Yeah. No, we work smart. We do a lot of interesting hacks, so
I saw the pre-launch tweets, Sajith, कि यार verify
yeah.
करना है कि हम सही जा रहे हैं कि नहीं. I think Sajith's become a
Yeah.
master at this. Because he knows Twitter पे intelligent लोग आके बोल देंगे यार जवाब क्या है करके. So he's also fact-checked some of these things.
Yeah.
I knew something great was in the offing when I saw you fact-checking a bunch of things. By the way, thank God for saying no consultant was involved in this. Shantanu was like, McKinsey को धंधा देता हूँ करके मैं. Like, how dare McKinsey not bill you for this करके.
No.
By the way, McKinsey is doing this. McKinsey should do this pro bono. I think they learn a lot more from Sajith and team than the other way around.
A lot of people ask us who was involved, etc. Tell us the truth, and people are genuinely surprised that it's like earlier it was just me and one analyst. Now we've expanded it. Just the input has gone up. Like suddenly we're getting a lot more reports, etc. So that makes a difference. But yeah,
I think
great.
AI
And
will help a lot.
yeah, and then of course, once in a while, you get founders like Chirag to share some of the numbers. This time, Chirag, delivery was very kind, so to share some numbers. And I hope to kind of get more people from the industry sharing numbers. We can index some of these numbers. We don't have to kind of show the actual numbers, but actual numbers help. And the idea is eventually this is sort of for founders, shared by founders, right? And we sort of become the intermediary, like a clearing box to say that, hey, let's kind of show what it is. Right,
Brilliant.
So yeah,
brilliant stuff.
Well, thank you
so
for
much.
that.
Also, for taking the time.
Yeah.
I do think that, Sajith, I think once the report goes out, other than Twitter, I think coming onto platforms like this, etc., would be amazing to kind of put the word out. I think the more people who read it are able to understand the nuances of it, the better, the more bang for buck in terms of effort that all of you put into this.
Yeah. We do an explainer as well. It's got a bit delayed. It'll release, I think, this coming weekend. Somehow we do this explainer. And then, of course, there are a few. This is the first show I'm coming on, so make sure to kind of launch it early, like So, but yeah, there are a few more shows lined, etc. But
It's
We
this
coming
will be
out
release
next
fun.
on
10 days.
Friday. So is
Oh,
that
that's
too late?
great. That's great. No, you're the earliest.
Ashish,
We
too
We'll
good
should
for
be
release
the
you.
after you. We'll keep it a day later. We'll keep it on Saturday, like
Really
just to
appreciate that,
make
Sajith.